So TSLY and the other YieldMax ETFs are the new buzzwords around the investing community, especially the dividend investors. They are becoming very interested in this, and some of the options investors as well. So what is this whole buzz around, right? So this particular YieldMax ETF is generating almost more than 60% return, which is like phenomenal in terms of if you compare it to the dividend regular investor, right? And to put that in perspective, I created a spreadsheet and just to see how much return you would have got if you had invested in TSLY, for example, right? So TSLY as in Jan, it was going for around $14. So if you had 100 quantity of that stock, your total return would be around 2200, which is like $865 dollar return in just 1 year, which is more than 60% return, right? You don't do anything for this, right? You're just sitting on this, and it is giving you month over monthly income, as you can see, right? Which I try to calculate in this spreadsheet. So in this particular video, let's break it down and see whether this is all glory, or are there any risks, or what are the risks and bad things about this YieldMax. So we're gonna break it down completely in this video. So if you are interested, please stick around. We are going to discuss in full detail. Hello guys, welcome to my YouTube channel. If you are new to this channel, then please consider subscribing, as I make a lot of videos around options and stock analysis. Okay, let's discuss today's topic, right, which is TSLY and the other YieldMax, right? So this is a fairly new ETF or a group of ETFs that were launched I think somewhere around November of last year. That's when the TSLY was launched, and this particular TSLY ETF is becoming really popular because of the yield it has given. And they have other similar kind of ETFs which they have done created on Apple, Nvidia, and there are some in the pipeline as well, which are being launched as we speak, right? So let's see whether what are the goods first. Let's look at what are the good in this ETF, and then we are gonna look at are there any bads or what are the risks, right? So before we jump on to the bad and the goods, right, let's first look at how they are able to generate this kind of return. What is their strategy behind it, right? So for that, I just opened their prospective document, and what you can see here, right, clearly, that their primary strategy that they are using is the synthetic covered call, right? That is their strategy behind generating this kind of return, right? So what they do is synthetic covered call is nothing but a kind of similar to the covered call, but without owning 100 shares of stock, right? So I'm not going in too detail here, because otherwise this video is gonna be too long. I'll create a separate video on how exactly they generate the specific, or what are the exact call or put they sell, and what kind of covered call they sell, right? So I'll create a separate video for that. For this video, let's just stick to the overall fund and how they do it, right? So this is their primary strategy, which is synthetic covered call, right? So as you can see, right, they are clearly saying that they have a full exposure to the Tesla stock, and their current income source is mostly through the options premium, right? So these are the two things that they clearly mention in this. And as you go through this document, they have explained the complete strategy here, which I'll make a separate video on that. So coming back to the goods, right? So the good part I have divided in three things. The first is the return. So they have, as you see, right, across their all kind of ETFs, they have returned almost close to 50%, which is phenomenal, right? And it is unheard of in any other instrument that I have seen before. The second thing is the monthly income. So they provide you the dividend monthly, which is a very good thing. A lot of people prefer monthly dividends, and there are less if you go to like real REITs and all, right, they do provide some of them monthly one, but the percentage is pretty low. So the monthly income is another thing that you get, and which is a good healthy amount of monthly income. If you invest even though if you just invest like $2,000, right? You're gonna get a good amount of monthly income out of it. And the third is the kind of diversification in here, because a lot of people, if you do buy like diversify through ETF, which is made of like a SPY or QQQ, right? You are not focused on particular stock. If you are very interested to invest in a stock, but you don't want to like completely get full exposure to the stock, this is an alternate way that it gives, which you can diversify. For example, if you want to invest in Nvidia but you do not have that much capital to invest in, and you also want to do kind of a covered call in Nvidia, right? But you do not have that capital, because to do a covered call in Nvidia, you will have to have $50,000 of investment, right? So if you don't have that kind of investment and still you want exposure to Nvidia, this would be a perfect ETF to do that. It's gonna generate you very similar returns as you would if you do the covered call on your own, right? So that is another major advantage of this. So there are two major cons that I would like to highlight here. The first is the expense ratio. They have a good or a steep expense ratio of around 0.99%, which is in comparison to some of the other ETFs that I've seen, which is not too high, but still this is something you have to consider. So 1% is what they're gonna charge in terms of their expenses. The second major risk that I see with this YieldMax ETF is that this is giving you like a direct exposure almost to the underlying, and if the underlying does not perform well, you are at risk of losing your money, right? So that's what in the prospect also they clearly say you can lose all of your money in this if the underlying does not perform well. Okay, what is my take on this, right? Or my final words on this. So first thing first, if you really believe a long-term growth of a stock, but you do not have that much capital, or to go, if you want to leverage your capital, then this could be a good instrument to do that, because it provides you exposure to the underlying directly almost, but it generates that income or kind of a leveraged income, and you don't have to do that much legwork as well. You're not gonna, if you are an options investor, you don't do a covered call on your own, you don't have time for that. You invest in this, and this is gonna execute the exactly very similar strategy and going to give you the return which is very in line with if you do the covered call on your own, right? So my second point would be that if you want to still invest in this, but you are kind of Tesla is not something that is you wanna go with because of its volatile nature, you can select some of their other new ETF that they have, which is like Exxon Mobil, right? Which is comparatively very stable. Your dividend may be less, but it is definitely compared to the actual like other dividends like a REITs and all, it would still be much higher. Or you can go with like Apple, which is considerably less volatile than Tesla. The final thing is do not go all in on this ETF because they are fairly new. Let them kind of grow overall before you invest or go all in. You can start with a small capital, see how their dividends are performing or how they perform in the bit of longer period of time, and then you can go all in if you want. Do not allocate your 50% of portfolio in this. Start with 10%, 20% portfolio amount, and then you can if you like this, if you like their return overall, and if you have a bullish on underlying, then increase your portfolio size based on that. So that was it about this video, and as I promised, I'm gonna make a separate video to break it down how exactly they do this covered call strategy or synthetic covered call strategy. So do subscribe and you're gonna get that video very soon. Happy investing guys, and I'll talk to you in my next video. Bye bye.